incredible panel. I don't think oftentimes you can get this caliber of 5 individuals on a single panel. So what I'm expecting is a ton of wisdom from you guys, a lot of lessons for the audience, a lot of great strategies and ideas. Let's start introducing yourselves. We'll start with Tim.
Sure. Tim Brown from SolarWinds. I'm the CISO for SolarWinds. So I was the CISO for SolarWinds before our large incident and then after.
I'm Greg Sands. I'm founder and a partner at Costanoa Ventures. We're a Silicon Valley-based early-stage firm in enterprise and fintech.
Todd Weber, I'm a partner at 1011 CTO. Been at 1011 for about a year. 1011 is a stage-agnostic, cybersecurity-only fund that has been deploying capital since 2014. As Yoav mentioned, just raised our 3rd fund for that, and looking forward to talking to everybody.
Hi everybody, Udi Mokady, co-founder and CEO of CyberArk Software. Founded here in CyberArk, went public in 2014.
Hi, Richard Seewald, founder and managing partner at Evolution Equity Partners. So we're a growth and early growth stage cybersecurity investor, investing tickets of 5 to 50 million. United States, Europe, Israel, offices in Palo Alto, New York, London, and Zurich, and quite a lot of activity in Israel. So both prior and just about to be. So really a pleasure to be here, and look forward to speaking to everyone.
Great, thank you. So we'll kick it off just by looking at recent history. Last year was a blowout year. Everybody made a ton of money, at least unrealized, some realized. We got a lot of unicorns last year. It was the real heyday, probably the climax of history when it comes to cybersecurity startups and vendors. This year it's looking a little different. I'll stop there and maybe kind of get your comments about how that's affecting both early stage and late stage startups. Maybe we'll start with you, Richard.
Yeah, so when you look at the history of cybersecurity, let's go back 20 years. Post 9/11, we were in a crisis. And, you know, cybersecurity funding, to the degree that there was significant cybersecurity funding, declined like every other time during a crisis. But when you look at returns that were generated in the wake of crisis, post 9/11, post 2008, post COVID, those were years that generated the most attractive returns in private equity year on year. We can go company by company. We've dissected this. So I kind of look at the history of cybersecurity in the following way. You know, the 90s into the 10s are sort of the bronze age of cybersecurity investment, where, you know, there was a good amount of opportunity, limited amount of vendors, but ultimately those vendors grew very, very nicely and became sort of the iconic companies during that time. And in that post-2008 era, I'll call that the silver age of investing in cybersecurity. Kind of had the dawn of cloud computing, and the companies that you know today, you know, the iconic businesses that are public, the Oktas, the CrowdStrike, the Carbon Blacks, the companies that you know were born during that era. I think going forward in this environment over next 10 years, you know where I'm going. It's the golden age of private investing in cybersecurity. And, you know, the reason being, look, I think we all know the statistics on the nature of the hack, the increased attack surface, the ability to address multiple vectors now, not just cybersecurity, but blockchain, and on the horizon, quantum, and a host of other areas present significant opportunities for entrepreneurs like you that are out there. So again, I'm gonna, put my foot down and say the next 10 years are the golden age of investment for cybersecurity.
So yeah, let me give a perspective from the CISO's perspective. Our job keeps getting harder, never changes, keeps getting harder. So in the next years, what we see is more, right? More technology need. Our software is going into so many new things, right? Both in medical and finance, everywhere around the world, we see just more and more and more great technology getting us more efficient. What that gives us is more and more challenges we haven't addressed yet with companies. So I won't speak to the investment side, but from a security perspective, we need more, right? We need to be able to fit the new models. We need to be able to grow. That's not going to go away no matter what the economy does. We're still going to be implementing technology in areas that we haven't done before, and then there are going to be gaps that security is going to need to fill.
I'll take it from the seed stage perspective, which is I don't think company formation has slowed down. I don't think seed stage investment has slowed down. Not all in cybersecurity, but we closed 2 deals in the last 6 weeks, and we've got 2 term sheets out right now. And I think, but it is definitely the case that for companies that as they get to mid stages, they're ready to raise an A or a B or a C. There's more focus on fundamentals. There's more focus on growth rate. There's more focus on the correlation of growth rate and burn rate, the unit economics of how much it costs to acquire a customer and how much that customer is worth. So right now, you've got to build solid foundations, go brick by brick to get product market fit, to get sales repeatability before you start to scale up.
Repeat a lot of that, except I'd even go back a little bit more generic on that. First of all, at the early stage, as you were saying that, we need the technology function. We need the evolution. The vectors keep coming out. The large platform players have a difficult time keeping up with that. And so this is the R&D function for the entire market. And with that, at the early stage, not just focus on the profitability, but it's just the base level, solve client problems, attract new talent, do the basics that are good, and then the valuation stuff typically works itself out. As later stage, the repeatability and the economics kind of do play a more important role. But I would just say, I'm kind of with Dino as to the, we're only thinking that it's down because of comparatively to what it was last year. And if you look at it, even statistically, over the past 10 or 15 years, you're looking at a very healthy environment. You're looking at a very healthy industry, and one I don't really spend my nights up concerned about.
Udi?
Well, I think I'll wait for later on to kind of give the the CyberArk journey was to never go frothy in good times and to never overcorrect in bad times, and that would be my advice to the folks in the room. And I think we'll talk about it as we go. Very optimistic if you have a good solution for your customer and you're very customer focused. So especially the companies that have been funded or have a path to funding, I think have a great opportunity.
Great. Let's focus a little bit on unicorns, because that's just a phenomenon that people are really interested in. Last year, I don't remember the number, but I think it's certainly double digit, close to 100 unicorns formed just in cybersecurity alone, which is obviously unprecedented. Again, this year doesn't quite look like that. Just wondering, want to get your take on that sort of unicorn phenomenon. Where's that going? And specifically, I have a question about unicorn companies that have achieved unicorn status on little to no revenues, and are sitting at that sort of valuations right now. How do you feel about them, and what would be your advice to them at the moment? Anyone?
So that's a tough one, right? So I'll jump on that. Look, justifiably, there have been companies that achieved unicorn status because of, in some cases, multiple triple-digit top-line growth. They've built solid products, addressing a solid market, and are going to grow into some of the iconic businesses going forward. I think for the companies that kind of, got to that status with a few million of ARR, clearly the next couple of years, even though, well-funded, you're going to need to demonstrate value and, product and accelerating growth. So this is nothing magic. Your numbers in the end on the next round of funding need to match the type of valuation that you might expect to get on $1 billion. And if you don't, there'll be down routes. There'll be, for a number of companies, inevitably, there'll be a brick wall that'll be hit, where there'll be hard decisions on next rounds of funding. And that's a natural part of the cycle. That always has happened. It's nothing unusual. It happens to be just that we have more unicorns now. So there'll be more bricks to more walls to hit. but we'll resolve that as an industry. And there's enough capital out there to kind of rework valuations in the space. And you'll see different types of investors come in and work on restructuring rounds. And that's just an opportunity for more kind of involvement in the industry.
Just to hit on the down round side, it's not the end of the world. It really isn't. I mean, granted, there are some people who might take some bleeding from it, but it's Facebook took a down round. I mean, healthy companies have done it. And, from a recommendation standpoint, I've heard it from a lot of you guys, it's healthy for some of this to happen. It's healthy for you to really go look inside your company as it's grown, really attach okay, whether it's personnel or spend or however you're doing it, is it really attached to your growth? And, if you got rid of a few things that may need to be gotten rid of, it'll help you on the growth function, or at least it won't mess with your growth function that you're trying to achieve. But you then get a healthier burn rate, and then all the fundamental structures come in, and then you can achieve the unicorn status in a healthy way, as opposed to, kind of the frothy way, as Udi was mentioning.
Yeah, I mean, we've seen it before, right? It's nothing absolutely new. It's just the volume is what is new, right? There's more companies that were kind of given unicorn status. But, some fall a little bit, but if their fundamentals are good, they get leveled out to what's real, and then they continue on and are very healthy.
Let's talk about startups. Let's say they're in the mid stage, right? Let's say they're around Series A, Series B. They're not unicorns. They're just normal startups that have kind of grown in the normal course, and they're trying to ride out the current market, right? Let's say they've got 18 months of cash. They're concerned about fundraising. They're concerned about burn. What is some advice that you would give those startups?
I'll start on this one. The first thing that I do is just talk about priorities. And priorities in a time like this are maybe 1 and 2. And anything below number 2 is below the line. And startups, I mean, frankly, one of the problems with companies that get valued too highly too quickly is that they try to do too much. And reducing complexity, being clear about what really matters, and then just eliminate everything else. And to me, that's really the number one thing that a company facing this kind of environment can do.
I agree. Focus on mission is your key priority. Anything else kind of, we got distracted by getting a lot of other things. Now you got to listen to your clients who may tell you to go in a different direction or a slightly different direction. But in the end, like I said before, you're really trying to just make sure your business is optimized, and the investments you make are going to be tied to growth and not going to be tied to some, just side project that, diverts focus from what your mission is.
So 3 things: heads down on product, demonstrating value. Often in down times when you're able to demonstrate value to a CISO when things are difficult, you're going to gain that credibility over the long term. So it's actually an opportunity. And then looking at burn and manage burn. So making sure that, that 18 months, you might be able to extend that to 20 months or 24 months. And just being rational about that. I think if you pull all those 3 together as we turn the corner on this part of the, of the cycle, you're going to be positioned well, perhaps, to raise a next round of funding.
I would just say that in these times, for the CEOs in the room, the VP Finance becomes a close friend, like a good person to partner with, because they actually can help you extend that runway that you're talking about, VP Finance or CFO.
That's a great segue to a question for you, Udi, and for you, Tim. So what's really interesting is how bigger companies, not startups, how bigger companies are managing the downturn. And here we have the CEO of a leading cybersecurity vendor, CyberArk, and we have a CISO of a large software vendor, SolarWinds, and they could tell us about what's going on behind closed doors, what kind of conversations are you having, and what kind of decisions are you making now in the downturn?
Right, as a public company, I can tell you everything that's going on behind closed. I will say this. I think that's what I want. If I can give it to the crowd here is actually that's where the experience comes in. I mean, we've seen the 2008 downturn, and some of the folks here were doing other things back in 2008, right? But at the time, a lot of the VCs, primarily West Coast VCs, were talking about you have to suddenly cut and go berserk. And I remember we were lean and mean, and we looked at our own business. We looked internally, and we said, no, we were always lean and mean. We're not cutting, and we came out of it super strong because we did not. I mean, you have to look at your own business. I think we apply that same methodology today as a public company. Like, we really analyze our pipeline. What are we hearing from our customers? What are we hearing from our channel partners? And I have to say that for us, we're not seeing a response in the real buyer environment. And I'm not talking about the funding environment or the stock market, but a real change in priorities. I think Dino covered it well. Cybersecurity is still high priority if you are creating value to your customers. So we're hiring, we're growing, and doing all of those things while remaining very aware and looking at real data. I would say at data that applies to us and not just generic noise.
Yeah, absolutely. So, when we look at things, always start on the customer. We're always focused on what the customer is looking at, what they're, where they're going, right? Anticipating where they're going and making sure our products are extremely relevant to where they are and what they're doing, where they're headed. That's kind of one. Internally, we focus on our internal budgets, our internal spend. We make sure that spend aligns to where we're going. We've also changed models of selling, right? So we've been classically a non-subscription based model, and we've actually shifted about 20 to 30% of our market over to subscription in the last 6 months because it's better for them, it's better for us. So we are looking at models that work for the customers and really focusing on, hey, how can we keep growing? Also investment in new, right? And expanding the market in different areas to be able to, really grow that existing base and that existing base that we've had. One of the things I don't take for granted is we were very lucky, right? Through our incident, our customers loved the product enough to stay with it after a major incident. We're still at 90+% renewal rates, which is sort of unheard of. But that's because the products are fitting that need. Now that need is slowing, and what we've had to do is invest in other areas to make sure that we grow beyond that. But customer is key, and just managing the business in the right way, anticipating potential downturns.
So just double clicking on a couple points here. Tim, given the downturn, are you looking at security vendors differently? Are you negotiating with them differently? Is there anything changed since last year?
Yeah, well, absolutely. So more because of the incident, not necessarily the downturn. What we've been asked to do is look at every one of our vendors from a security perspective, make sure every one of our vendors is safe, look at not just a simple questionnaire, but do evaluations. The same thing that our customers are doing to us, we're doing to our vendors, because we can't have something like that happen again. So absolutely focus on the vendors, focus on what they're providing, focus on whether they fit in our critical infrastructure or not, and have a lot more scrutiny. Contractual, an incredible amount of scrutiny on contracts right now with all of our customers. And I think we'll see that come across the industry very quickly. They're expecting more SLAs, they're expecting more breach notification, they're expecting more insurance, they're expecting a lot of things in contracts today that weren't expected a year and a half ago.
And Udi, you said that you're not doing any layoffs, right? You said that. There are other security vendors that have done layoffs, right? And I won't state their names, even though it's mostly all public. What do you think are the consequences of laying off people? Say you lay off 10% or you lay off 20%. What happens?
Oh, that's a tough one. So like you said, we're growing, we're hiring, and touch wood. It's always been my approach that should be like the last resort, and maybe it's the Israeli roots. Like you kind of stick with your team as much as you can, and don't make it an Excel. I'm not trying to give anybody any crazy advice, but since this is kind of an advice kind of forum, in 2008, as a management team, we cut our own salaries without saying it to anybody. Like we didn't lay off anybody, like I said, but and we sliced off some of our own salaries. And look, we're strong, and 6 years later went public. So I don't know if it's a magic formula for everyone, but yeah, go to that Excel sheet and see what you do there. What are the implications? I think there's so much demand for talent in this space. We're all talking about it. We're hearing it from our own customers. Like number one thing, shortage in talent in security. Of course, it's also an opportunity for new models like MSP and others because of the shortage of talent. But those companies that would lay off, I mean, those people will find jobs. And if you're forced to lay off, make sure you're able to protect the core of the company, because by doing kind of 10% or those automatic layoffs, you can think you're taking off fat, but you can lose some muscle that will also leave. So kind of make sure you hold on to the core of the company and protect the culture of the company.
That's great advice. Thank you. We will be asking the audience to ask questions as well pretty soon. So please think of some really great questions for our amazing panel here. Let's go over to the investors in the room for a second. Richard, Todd, and Greg, tell us, what are you doing to help your portfolio companies weather the storm? What are some things that you're doing? How are you getting involved? How are you helping them get through this?
Well, I mean, the first thing, we even talked about a little bit about how to manage burn function. Managing the product, I can't emphasize that enough. You want to double down on the product. You want to be as sticky to your clients as possible, and you want to make sure that customer success during these times is a key fundamental. But it's also like things to how to get creative on financing it. You don't want to do an official raise, okay? How to take on lines of credit, how to work with your VP of finance if you're not friends with them. But in some cases at early stage, you don't really have a VP of finance yet. So be that, add to that sort of level of muscle from a financial perspective and how you can help them. But also like really emphasize, if you have to do layoffs, focus on like the stuff that's detracting from the mission. Nobody likes doing layoffs, but it can make your business stronger and more efficient. And to Udi's point, you just have to make sure you're really staying true to your culture side, which is more difficult to keep doing while you're doing layoffs. But in the end, focus on your clients, focus on solving problems, and then get creative on the financial side if you have to. We're there for our portfolios to help them in any way we can, and like I said, getting a little bit more creative on the financing to lengthen burn rate or lengthen runway.
So we, like you, are largely a seed stage investor. We'll initiate at as early as company formation or at Series A, so we're largely dealing with a very early stage portfolio. And I think the first thing that we do is, again, we've got about 30 CISOs, about 20 CIOs that are, in our network, and partly we're trying to get people to have enough conversations. They're not always, it's as important for customer discovery as it is for sales opportunities. And so that's one, just redouble your conversations with customers and prospects. The second is know where you are. And this is where I think the whole growth at any price, go big or go home movement really hurt startups, because you lose the map for where you are. And so every once in a while saying to a CEO, you don't actually have product market fit, you're not solving a big enough problem, or you need to narrow the scope of the audience that you're talking to. And we had one of those conversations recently with a company, and we dispatched our marketing-oriented partner, Martina Lauchenko, who just wrote the seminal book on product marketing for tech products called Loved. You can get it on Amazon. And we basically sliced the TAM in half to focus on operational databases and not the data warehouse, because that's where it turned out that 12 of the 13 customers were. So that focus and knowing where you are, and then I think coming back to saying, premature scaling is the number one cause of death of startups. And so when you know where you are, basically stay compact in anything until you figure out repeatability. And so that translates into sales and marketing. Stay compact until you figure it out. And those are the kinds of things that we're doing. I'll point out. So, Sequoia and their memos, like RIP Good Times was 100% wrong. right? The people who are most over their skis are the most afraid and hammering on the brakes. And those of us who help companies build brick by brick into really good companies with great unit economics, we're not that scared and we're not changing our behavior that much.
Wow, thank you.
Just one note on the sales and marketing side, right? It's so important. So you have to remember the life of a CISO. I have my mailbox fills up with at least 100 of small companies that want to talk to me usually a day. So we're always filling up. I can't pick up my phone. I never pick up my phone any longer. My CIO is the same way. So you need to figure out ways to be able to leverage your partners and ways to leverage your early stage successes to help you get introductions to the right people. As I told other groups, right, if one of my friends CISOs recommends you, then I will talk to you, right? But just a cold call will not work. Yeah, it just gets flooded with so much. It's very important that you have a very good model to go to market with that doesn't need instantaneous growth, right? You take a 1, then go to 2, go to 5, go to 10, and you will get growth. It just may not be 1,000 to start with.
So for all the CEOs in times of turbulence and in the event you are doing cost cutting, focus on culture and, I would say over focusing on it, mission, values, culture, going through that on a day-by-day basis with your team, week by week, and just, instilling the strong points that you have as a business. It helps a lot to kind of get past some of the market noise that's out there, and, you may be reading things and hearing things in the market, but a solid, approach to instilling that culture is critical. And I'm sure, you spoke about it, and that's something that every company out there is doing today to kind of nail that part of the operations.
Great. Remember the audience. Remember the questions. They're coming up soon. You can't have a panel with Tim without asking about the SolarWinds experience. And I know you're open and you're okay talking about that. I mean, I've often wondered what the first 72 hours felt like for you. Any experiences you can share with the group here?
So the first 72 hours is just kind of pure hell. That's kind of the way it looks like, right? So we found out on a Saturday, we've got everybody in town, we've got people on cell phones, this was middle of COVID, nobody vaccinated. So we tried to do things remote, so we worked probably about, till like midnight on Saturday. Sunday we all came into the office, we didn't leave until about 3 in the morning. We published a 10K at 3 in the morning before the market opened. With that, we were actually able to discover a number of things, right? We knew it was on our source code. We knew that it had affected our supply chain. We had a very high number of customers that we wish we didn't know at that time, right? We said 18,000 were potentially affected. It ended up being about under 100 actually went to second stage. So as soon as you see that, and then the news broke on Sunday, so we found out on Saturday, the news broke on Sunday, we were on, I think, 60 Minutes Sunday night, and then everywhere in between. Now, during this type of event, you don't talk to the press. So since we're not talking to the press, the vacuum is filled with ex-employees, disgruntled employees, people that just want to talk. So things like we talked about on stage the other day, SolarWinds 1, 2, 3. Nothing to do with anything. 9 months earlier, somebody had reported it to my team. Yes, it was a mistake. A password got posted to a public GitHub repo. Things happen. They reported it responsibly. We fixed it. I think they posted a blog on it or something. But when the news when reporters around the world were looking for somebody to talk, those types of people raised their hand. So bad news is everywhere. Don't look at the news. We focused 100% on the customer. All right, if I focused on everything bad that was said about me those 2 weeks, it just wouldn't have worked, right? So we're focused on how do we get the customers in the right place. Because we didn't know that, the threat actor had left and they shut down their command and control server in October. We didn't know that before that. We're thinking all of these customers are at risk. So how do we get them to the right version? So our support queues, for some reason, 19,000 sticks in my mind. But Christmas ended up being a godsend because everybody else stopped working. We took Christmas Day off, that was it. But we kept working. We pulled everybody in the company to answer support calls. And then we had calls from every country in the world. We had calls from the US because Operation Warp Speed was our development of the vaccine. Were any of these customers on the list? What were they running? So those are the types of questions you're fielding. Then you're fielding questions from the FBI, you're fielding questions from law enforcement of all sorts. And then you're attempting to get as much information out to the public that's the truth that you can. So use your national defenders. CISA was a great partner through the research community, was very, very good and strong. And you just have to realize that there's some side motivation, right? I tell Charles and Kevin they owe me at least $1 billion for their evaluation from Mandy, right? Because their job was to report extremely good research, and they did. Nothing was wrong with the research. That's what made their revenue that quarter. That's what made their revenue that year. And they wanted it in the news as much as they could. And I don't blame that for them at all, right? Their research was extremely solid. It was simply that's the motivations that you need to deal with. Microsoft didn't want things about O365 said that in the news, so they were there. Different people, other people wanted to attach themselves to the incident, so they were there. So you've got a lot of different things and a lot of moving parts. And then, our work was to try to get things better. About 4 months in was the first time somebody said something nice to me. I'm sitting on a panel like this, virtual, and a woman, so I introduced myself on the panel, and a woman from the House of Representatives there, and she said, "Oh, Tim, before we start, I just want to say something." I'm like, "Oh, no." What she said is, "Thank you." She said, "Thank you. Thank you for being honest. Thank you for being open. Thank you for being transparent. Thank you for being an example." So that took 4 months, right?
And thank you for sharing that story. Really, thank you.
I'll say thank you too to you. I mean, you helped create it.
One of the other side benefits is that I put millions into the security budget of every company in the world. So,
Well, that too.
Wonderful. And you can't have a panel now with Udi on it without Udi telling us at least a little bit about CyberArk Ventures.
Oh, what I should change. But Tim, I also want to say thank you because I think you were helping the industry. That transparency, what you just did, transforms the industry and educates everyone and seeing the other side. So I really appreciate it. It's amazing. So yeah, for CyberArk Ventures, so we have multiple ways of partnering. We have reseller partners, we have technology integrations, and have built global channels. But we're very plugged into the startup ecosystem, and we always felt that we can do more, and that we have good insights into the innovation, especially going on in Israel. And it was actually during COVID that we kind of decided to really make do and learn kind of best practices of do's and don'ts of how do we create a corporate fund, but that comes in peace with VCs and actually lets the VC lead the round, and some best practices that we wanted to put in place, and find some exciting investments where CyberArk can actually be an investor in startup companies, bring them value because we have 8,000 plus enterprise customers, and we can give them insights and potentially some access to some customers, channel partners, etc., and keep it, I would say, remote enough from what we do in identity security and privileged access management, but where we can see some integration value and keeps us close to innovation and provides value to the customers. I literally had a few instances at RSA. I was so proud where I'm sitting with a CyberArk customer, and I'm able to recommend one of those three. One of them is Enzo, which is also a joint portfolio here with YL, that I'm able to recommend a third-party company, not as a friend, which I do that all the time, not as a friend, but as actually, hey, we've made an investment in this company, you should look at it. And it actually created a meeting, and all of those things. So that's the reason behind. We made 3 investments. I mentioned Enzo. The other one is Zero Networks, which is in identity-driven segmentation. So it's next generation segmentation. And Dig Security, which is in data security world. And so basically, we touch network applications and data, and we're going to be very careful and always partnering with VCs that we like and trust.
Wonderful, and thank you for your partnership. Let's open it up for audience questions. Does anybody have a question? And somebody needs to help me with the microphones. Any questions at all? The gentleman in the yellow shirt.
Hey, thanks. So really appreciate the panel and, of course, the transparency and everything that you've been sharing. While at it, there are a lot of entrepreneurs here or future entrepreneurs. And one of the big, maybe it's even a secret, but how do you actually make a decision or build that trust to go with a new vendor when you are acquiring a cyber solution from a startup or a company that's relatively small, maybe unproven? What do you really require in order to get that confidence?
I'm sorry, I didn't get the whole question. What was it? Oh, how do you trust small vendors, right? So it depends where they fit, right? If you're fitting in my critical infrastructure, my critical components, say you're trying to, have my data flow through you, that is, I'm a bank, you want to be in the middle of all my transfers. Very, very hard level to trust a startup. But if you're doing a function that's sitting off to the side, if you're doing a function that doesn't end up being, if you fail, it doesn't end up, stopping my business, those are kind of the ideal ones to start with, that you fail open as opposed to fail closed, because then I can put you in, get used to you and what you're doing, and then I can move forward. Or maybe I'm putting in or installing you in a subset of my environment, or segmenting in the environment. So those types of things allow me to control the risk I have with a startup, right? So think about that as you implement. If your implementation says, I need to control the network for everything, then it's like, wow, I need a lot more. Oh, you want to be in my little dev network, or my certain set of customers, or a certain set of environments. That makes much more sense from a risk perspective for me.
And at CyberArk, we of course, I'm super pro startups, and of course we take on vendors from multiple sizes. I agree with everything Tim said. I would say the other side is transparency from the founders, from the company. It's appreciated. You just say, look, oh, you know what? For your scale, I wouldn't start here. I would start there. That always goes a long way. The customers appreciate that big time.
Absolutely. So don't tell me you do 100% of things. That instantly makes me not trust you. So the 100%, you don't cover 100% of anybody's environment. So don't say 100%, just tell me what you do, right? Make sure you're accurate, because 100%, all, those are bad words for me. So just kind of tell me what you really do and where you are, and I'm fine with it. Just tell me what your limitations are, and then we go forward, right? But if you start saying you do everything in the world, I know that that's not true.
I can just add one little piece to that. From my previous role at Optiv, where you're deploying lots of different technologies in lots of different places. For the most part, the honesty side is there certainly, but it's also the interrogation mechanism. You also mentioned it. The other side is if it's coming from a trusted source, it's coming from a trusted partner, and that way you can short circuit a lot of those conversations.
Yes, absolutely, right? If somebody that you've already got is working and they're happy, that's a huge, huge, huge benefit to you. What I was telling people the other day is I take about 12 hours out of my time to be able to evaluate a small company to even start with. I can shift that to 30 minutes by talking to you and just say, hey, what do you think about it? Tell me honestly. Okay, what's it do in your environment? Show me what it works like. And 30 minutes later, I say it's either a fit or not, as opposed to 12 hours investment on the other side.
Hello. Okay. So Tim, you talked about cybersecurity vendors or startups benefiting from trust and things like insurances or a risk assessment when partnering with a fund. And I wondered if you saw this also working on the other side of the ecosystem as an important criterion for customers' buying decisions when a cybersecurity startup is looking to sell. Would you think that something like insurance for performance detection is something that would matter to customers when buying from a cybersecurity company?
So at the large stage, absolutely in contracts, we are required to have insurance, but it's really insurance for non-default, right? So it's insurance in case of harm, right? It's insurance saying, okay, you've done damage to my company. So from a startup side, I don't know if that's really practical for you to get into that level of insurance. But depending on the stage, our customers require insurance from us, and it's necessary for us, and they require a certain level of indemnification for us.
Thank you.
First of all, thank you for a great panel. I've heard, at least from two speakers, things which sound extreme, but I think they were right. One of them was Manny Barzilai, who was saying there's a need for a breakthrough, change of paradigm, and we have to move from horses to cars. And one of the speakers this afternoon, a hacker, was saying, you're all lying to us. I can hack in less than a minute. I can go into any system. So my question is, I myself am in opinion that there is a need for a major paradigm shift. You as VCs, you're betting for the big ones. Now, if there is really a need for a paradigm shift, where would you get the confidence to bet on a new paradigm when the governments, the big governments with all their budgets are still going step by step by step, unless they have some Manhattan projects? So what role would you play in getting into totally new paradigm shifts? Because the escalation of the attacks, we all see it. So how are you dealing with this paradigm shift issue? Or we just wait and see until, there'll be a big fall?
So I'll take that. And, a big paradigm shift that is on the map of some, but probably not on the short-term concerns of CISOs, is the effect of quantum computing on our encryption infrastructure. And, I think in that instance, there's opportunities in the market to address next-generation quantum encryption platforms or quantum security players. So I just use that as an example because I think there are opportunities out there like that in companies being developed that address things that are not on a near-term horizon. And you need to expect to spend some time with a company like that until you kind of reach a point where a quantum computer goes live. Having said that, a lot of the companies in that category actually develop technology that hardens the current encryption infrastructure and prepares companies to do that. So that's sort of a pathway to where the big event happens at some point in time, inevitably, whether it's 3 years or 10 years from now. Companies are investing in the insurance around, hardening infrastructure today with the view of a potential event later on. But I think that's a pathway of how a VC can become comfortable with a technology that may not actually become relevant until a couple of years from now. It's actually finding a pathway where you can sell product in the interim to harden current infrastructure.
So as the resident early stage guy on the panel, not as the facilitator, fundamentally this is what we're betting on. What the governments are spending money on is completely irrelevant, right? Not even part of the equation because they're always a laggard, never at the front edge. And I'll say, it really comes down to four things. The first is understanding that there's a big unsolved problem, that that whatever we're doing now isn't working for whatever customers are. That's number one. The second is the proposed solution plausible? Does it potentially work? Now, we can figure out what the percentage likelihood that it works, right? And obviously, higher is better, but is it plausible? Does it make sense? And usually we're going to third-party experts. They're CTOs of companies. Sometimes they're academics or the like. I mean, I had Stephen Chu, who ended up as the Secretary of Energy of the United States, who at the time was a professor at Stanford, come when I evaluated a quantum computing company in 2003. And he said, NFW, it isn't going to happen. Don't waste your time. Not yet, right? The third is, are you working with somebody who has a chance to, who just has the durability and the resilience and the insight and the leadership to attract resources, both capital and labor, right? So that's the stuff that we do all day. Now, I think the last couple of pieces are twofold. One, I always look for, where's there a wedge? What's the tip of the spear? How do you get started? Because if you have to boil the whole ocean to change the paradigm, I'm not your guy. And then the final thing is, the way we get comfortable making those investments is realizing that the worst thing that can happen is that we're going to lose all our money. And if you're a seed stage investor, it just happens. You got to get over it.
Just one paradigm shift. Add even a little bit more is consumption model.
Todd?
Is you don't have to always just be about technology paradigm shift. It can be consumption model change as well. You look at small medium businesses right now. They effectively have pretty much given up on their ability to respond and detect on certain things. So that shifts the consumption model to those people being the users, to the MSSPs being the users who are going to take over their security programs. So you don't have to just be constrained to look at paradigm shifts just for a technology thing that hasn't been solved, but there are a lot of consumption models to solve too.
And I'll add to the consumption model in terms of the kind of behavioral economics of cybersecurity. And that, is trickier to call because it's about the behavior of buyers and CISOs. Often that changes over a period of time. It's very hard to call, but it's also an opportunity to build consequential businesses in spaces where there's a huge paradigm shift in sort of behavior in how people buy. So I think going back to the quantum example, in 2003, it was certainly early. NIST put out a paper on quantum encryption a few months ago, and their signals from the government, kind of demonstrate where the market potentially is going in your time frame. So I would pay attention to kind of those types of signals. And, as investors in early stage and growth stage businesses, our job is to kind of have that uncanny ability to kind of look in the mirror, to see what's coming around the corner, to identify clues alongside with you as entrepreneurs. And I think what we're talking about, all those clues, and you have the uncanny ability to kind of build a company around those clues to address a huge market.
I'd like to thank the panelists for this brilliant talk. Thank you so much. We appreciate it very much.